Two traders, two visions, two objectives, one chart. The bottom line.
Hey everybody, welcome back to The Bottom Line.
Bottom
Today, my name is Paulie V-Neck. All right, going a little more casual here
That's
on
right.
a Friday. The market's actually just ripped off my button-up shirt this week with how much of a sell-off they've been going through. So,
It's actually holding up pretty well, though.
yeah, it's
But the stock market is on the way down, though.
yeah. Oh, crypto too. Oh, crypto had a rough week, man. Last week
yeah.
and a half here. Last weekend was tough. After basically the bottom line, when we got done, remember we were talking about doing the inside bar patterns, going to the bar and handling business.
That's right.
I had to stay at the bar all night on Friday and Saturday because it was that rough. No, all kidding aside though, yeah, market's very volatile. Pretty big sell-offs across both, cryptos and stocks. So we're excited to kind of take a look at what we've got going on. Last week for the bullish or bearish, we were looking at McDonald's, and Ben picked the position to take, and
I went bearish.
He went bearish, and what was your target again?
My target was 246.
246, and
Didn't even come close.
and I chose 271, and I didn't think it was going to come close, but it actually just hit 271 either today or yesterday, so that was an interesting one. We'll cover that one really quickly.
That's right.
And then we've got a new bullish or bearish segment for you all this afternoon. As always, it's going to be a crypto. It's going to be near protocol.
That's right.
So be sure to stay tuned for that this afternoon, or towards the end of this video, as usual. So Ben, you want to just fire us up and let's take a look at maybe McDonald's and then jump
Yeah.
into the stocks?
We're going to go over McDonald's and then SMCI. I covered that in Financially Fit, the SMCI chart, head and shoulders pattern.
Okay.
I did redraw the lines in there, but yeah, it's had a crazy sell-off. But again, I'm going to go over McDonald's first. So here's when people get scared and the stock market starts going down, actually what happens with McDonald's is it actually gets a bid because
That's all that people can afford.
because people aren't. No, I'm serious.
I'm kidding.
right?
I'm kidding.
People
Yeah,
are
yeah.
now going
Yeah.
out to McDonald's, or they're thinking. At least the people who are investing, they're like, okay, well, we're gonna have less money, so where are people gonna start spending more money?
Right.
And they're gonna put it in McDonald's. So although we had this here, let me go ahead and zoom over a little bit. So we had this inside bar pattern here on McDonald's.
Don't
right?
tempt me.
It closed. We were right in this range, but then all of a sudden we got a bid. As you notice, the stock market is going down. McDonald's is on its way up. However, we're not done. The S&P 500 is about to fill a gap at the time of this recording, or it might have already done that. But so I still think McDonald's can go down as long as it doesn't get above this red bar high. It's still favoring the downside on McDonald's. You still have these pivots here, all this price action, where I think that it's going to have some additional support. But then if it breaks that support, 246.07 at this double bottom area is still my target for McDonald's. Okay, so that's kind of what I'm looking at as far as my overall target for McDonald's.
Nice.
So
Yeah,
what do you got?
I kept it pretty simple with mine, and honestly, like I said, I wasn't anticipating it to even hit. We were looking at it. I had to choose the opposing side. So all I had on here was this untapped weekly pivot right here, which is an untapped average of price, basically similar to like a 50-day, 200-day, 100-day, like a moving average. These just don't move, right? So that was just an average of price from the week previous to this via last week. So about 2 weeks old now. So we did come up and actually tag that. I'm in agreement with Ben. As long as we're not living above basically that level, I think the downside's still pretty much favored. So I agree with your targets as well for that. So yeah, another fun one to add to the bullish or bearish list there. But
right.
your boy over here with the 7 rings now, got it like Brady. I might have to get some made on Etsy with some
That's
candlesticks or something. But yeah, awesome.
It
Yeah.
seems like mine take a little bit more time to play out, like the Dogecoin.
Yeah.
Right?
Oh, yeah,
That
yours did hit,
almost
yeah.
to the penny.
Yep.
Right? So it was $13 is what I was saying, but it was 13 cents,
Right.
But that was my downside target, and it hit that, got a really good bounce
Just
off
a
that.
week later, yep.
Just a week later. I'm always
That's it.
about a week behind.
Ethereum used to treat me like that. I had to have a talk
That's-
with her.
That's right.
All right, so SMCI, tell me what's going on.
Okay, so SMCI. Again, I did this in Financially Fit. I had the lines drawn right here on SMCI for my head and shoulders pattern. But as you can see, this is a nice head and shoulders pattern right here. It comes down to this pivot low. before we get this nice rally up to the highs. And then here is the armpit of the right shoulder. And then here's the top of the right shoulder. And then it was interesting because it got to close below it. One thing that there's a couple different ways you can play a head and shoulders pattern. So you can play it on any close below the head and shoulders pattern. Well, this decided to get a nice drop, but then it actually came back. And how I like to play it is a retrace the scene of the crime. And so it actually did that a couple days ago, actually right after my segment. And then all of a sudden we had this huge waterfall. So we're about halfway between the actual target. So the target is the middle or the neckline, top of the head. And then you take that from the break point and then extend it the exact same distance. And I have a target of 518.17. So it's no surprise that we're kind of getting a little bit of a bounce at this level because we have this gap fill right here. Usually the first kiss of a bar, in this case it's a red bar, you're going to get a bounce. And so at the time of the recording, we actually had a $10 to $15 bounce off of this level. But the ultimate gap fill is right at this level. It's the lower part of a red candle. And so I still think it's going to get down to 150.24 before it gets, 733.76. That's the actual gap fill on SMCI before it gets a bigger bounce. So if you're looking for a downside target, 518.17 is a continuation of the measured move of the head and shoulders pattern. Okay, so if for some reason we do end up getting more of a bounce, the level that I'm looking for is right here. So you have another gap fill right at 926.88. So just because it's the head and shoulders triggered doesn't mean that it's not going to come back up, tag this, and then ultimately flush down to the 518 level. So that's what I'm seeing in SMCI. Oh yeah, you're going to also have some additional resistance because of the size of this red bar candle. You're going to have some resistance here. So that's basically the gap window before ultimately it could go up there and kiss that gap fill or fill that gap. So what do you got?
Not SMCI with the bearish armpit back test. You know what I'm saying? Like, I haven't traded an armpit in a while, so kudos to catching that one. All right, so I'm going to cover Bitcoin and Ethereum kind of quickly, and then we'll jump into our bullish or bearish segment, but I did want to touch on both because it's just been such a wild week since our last episode. And like I said, last time we spoke, I believe we were trading up in this region right here, probably around that 65, 66-ish. I'm pretty sure this was the low at the time. It was like right back down. We had the March range I was bringing up where we came back down to, which is essentially where we came down to earlier on, basically in the beginning of the month here. So we were trading right about here last week. Now, literally, as soon as we got off that show, basically, Bitcoin dropped another like 5 to, 8%. It really wasn't a massive drop on Bitcoin, but obviously we came down sub 60K basically. And overall, there's been a 20% downfall from the $74,000 high. So about 20% over the whole time now. And during that time frame, we had the altcoins got smoked. 50%, 70%, 80% down in a day. A lot of that happened over the weekend even. Definitely an area to look for some opportunities, but obviously anybody holding was not in a great position for those few days and haven't recovered since, right? So what is kind of next here? And for me, it's Bitcoin's in this huge range that's pretty much teetering right at the 2021 all-time high. And, it's one of those things where every time we get above 69K, obviously everybody's super excited, and every time we get below, everybody's super, fearful, which realistically, that is like a major area to be living above, and then on top of that, adding confluence for more upside. But for me, this is just a solid, just true and blue range at this point, right? You can see it clearly. I don't even got to, highlight it. We came down. We had an untapped quarterly average of price. So once again, talking just that weekly pivot I pointed out for McDonald's, right? This is the average of a whole quarter. So for all of Q1, that was our average of price, similar to a moving average, just doesn't move, right? So that's an area where price is likely to return to, just like a mean reversion. And we did that at this region. You can see we've barely been closing, just above that right now. For me, starting to close below that daily, especially a weekly, I would say that's probably the line in the sand for more downside at this point, right? At least the initial red flag, if we just started closing from here. Otherwise, I'm just treating this as a range. And, for me, it's picking up new positions down in these regions here. And as much as I'd like it to go back all the way to all-time high, which I still think is very possible, I'll at least be looking for a good amount of take profits for a lot of the newer positions I got in here, a lot of some of the new altcoins. I'm just being a little cautious because we don't know if that's really going to, break the high and continue on from here. Maybe we do roll over a little bit into the summer. But for me, I do think that we're going to see at least back to 69K for the 2000th time this quarter. And but we'll see, right? So, and like I said, the invalidation for me is really starting to live and close down below that $61,300 area. We got basically a little wick down there yesterday, and then we just shot right back out of it. Another sweep of this, and this has just been so incredible to see, right? Because you had basically all these lows, right, coming in all the way down here, over here, and this huge, move down here, stopped everybody out for days and days. New people are coming in, entering new positions, right? Because nobody's catching that exact low. They're all coming in right here when dust settles a little bit, things like that. Obviously, there's news that's going on around the world and everything like that. To me, obviously, I think you should consider it, but it's not always. We get this move down, and then all of a sudden, immediately you get a reversal. News comes in that it's something's really scary, and then immediately a new article comes out, says not a big deal. It's like that's a headwind, right? So for me, I'm just trading it level by level. You came down, you took out everybody once again. Another couple days go by, you took out everybody once again, but you can see that the wicks are just getting bought up. So for me, I am just looking to rotate the range once again, heavily targeting back to 69K. I do see a world where we actually come back up to the all-time high even, clear out all these levels right here, and then I'll have to reevaluate. And I did want to take a look at Ethereum really quick, if you don't mind, because...
Do you think the halving plays a part in that? Because doesn't that happen tonight?
The halving, to me, I think that at this point, the halving is so different, as far as like what the
expectations.
I guess, yeah. Like for me, I don't even think about it. I couldn't. I know it's tonight or I know it's tomorrow in that realm. Like, but as far as like just look at like you can actually just trade Bitcoin very technically now. Still incredibly volatile, but as far as like an asset, I mean, it's a $1 trillion asset. It's been holding that level for quite a while now. Obviously, it's getting really big flows, but I don't think that those are going to affect it in the sense of what it did. To me, I still see just the technical levels, and once again, 61,300, we lose that. It doesn't matter if it's before the halving, after the halving, all the things that happened with that, as everybody always said, or we never saw a new all-time high before a halving. Well, we got that last month. Yep. We always have this huge dump before the halving. We got 2 hours before we don't have that either. I mean, yes, we had a 20% pullback, but that's not 50. That's not 50%. We got the COVID drop, last time around right before the halving, and that was like a 50, 60, 70% pullback. So is something like that still on the table? I say yes. I just, for now, it's just I'm trading the range until it's over, basically. Now, Ethereum, on the other hand, we brought this up weeks and weeks ago, right? We were trading at $4,000, and I highlighted, I took it off now, but there was a February naked point of control right here at 29.22. There was the 0.382 Fibonacci retracement down here, which is from the overall low of Ethereum at like $900 in June of 2022 to the $4,000 high. This is the first kind of line in the sand for a pullback to get the continuation if you're going to see it. It's a shallow retracement. However, that's like a 30% pullback just because of how far we went up. But we were talking about this at 4K. We were targeting down to this region. I just want to kind of highlight how, sometimes the news and everything does come into play and everything. But you asked me, you said, what's going to cause, a 30% sell-off on Ethereum at the time? And this is like January, right? We were looking at this back in January 18th. And I said, you know what? It could be the ETF gets pushed down the road. It could be anything, right? Obviously, now we know what's kind of causing, more worry in that sense. However, what was this? Technical move, right? So for me, it's 28.83. I think we're going to get a bounce here. And unless we start living back above the high right now, and right now this is tradable, right? I'm trading this every single day. I ended up actually selling a huge position of my Ethereum, right? So I have more Ethereum than I have Bitcoin from forever. Like I've gravitated towards Ethereum versus Bitcoin. Anybody can say what they want to say, but that's just been my choice of the two. As far as holdings go, and I accumulated X amount for years and years. My last major acquirement was at $1,200. And I sold a good amount of it, 75%, so I still have 25% of the allocation. Sold that at $32.80, and I'm honestly looking for, I won't really buy that back unless we get a huge change of events. And if it leaves me, the market just leaves without me, I'll just keep the 25% in there. I'll allocate that to something else because it just is what it is. But otherwise, I am looking for like 2,500 and realistically potentially back down to like 2K for Ethereum over the rest of like this year, maybe into the summer. But I just wanted to point that out. So we did come down to a technical level, looking for a bounce in this region, and then we'll kind of reevaluate with that as well. So let's get into our favorite part.
All right, here we go.
All right, everybody. So bullish or bearish? once again has made its way to a nice, comfy screen TV wherever you're watching this show from near you. iPhone, the Android, the old green bubbles. Who knows? So today we're going to choose. It's my choice. I'm going to choose the asset, choose the direction that I'm going to go with. Ben has to choose the opposing view, and then we'd like for all of you to vote for who you think is going to win down in the comments.
That's right.
And yeah, so today I'm choosing near protocol, and I'm choosing bullish. And you already know I'm going with a 25% go big or go broke, go big or go broke target. So let's head to the charts, and I'll show you what I'm looking at. All right, so near protocol. It's actually an asset that I've gotten into heavily down in the $1 and $2 range, basically all of last year. Took a big profit level at 770, basically, which we came into that just a couple months back. And I'm looking to, kind of reacquire for longer term positions. However, short-term stuff right now, I think in the next week here or so, we took a huge move down here. Actually alerted in the Trader's Edge crypto service on verifiedinvesting.com for a buy signal right here, right at the Q4 23 high and into this local gold pocket. And I'm targeting up to this weekly pivot here, which we've essentially kind of come into. That's about a 15% move here. And if you can see, just another thing to just kind of add on, minus all my squiggles, is that you can look at this almost like, an ascending triangle of such. You can kind of have a measured move with that. We have local gold pockets all in that region as well. And for me, I'm just looking to flip this region right here, that 590, and I'm actually looking for a move up to about $7. So keeping it simple, just kind of consolidating sideways, looking for the break above 590, and I'm looking for $7. Benjamin, what do you think?
So I'm actually kind of glad. So I'm basically going the same direction that McDonald's did for this kind of the same reasons, right? So, and the fact that I have to, right?
When the markets go crazy, everybody has to go buy near.
So we have this inside bar pattern. So this is a really...
I'm telling you, don't tempt me. Don't tempt me with the bar.
This is a really bearish signal. Plus, you've got this bull flag. This bear flag. So I think it's going down. So my target is right here at the... basically $4.29. And the reason is you've got this hit right here, 2, I'll call that a kiss, 3, 4. So if it hits, it's not going to stop here. It's going to flush through. And then you've got this pivot high right here that is already kissed. But I'm targeting the top part of this region right here. So I have this price action. It's going to bounce off that level. But I believe it will pierce, and then ultimately I think it's going to go lower.
So it ain't going to stop at just a kiss on the downfall.
No way, no.
All right.
It's already kissed it once,
We'll
right?
see. We'll see how she goes.
Let's go.
All right, everybody. Well, that's all the time we have for you on this lovely Friday for the bottom line. We all hope you enjoyed the episode as always. And Benjamin, do me a favor. Bring us home.
All right. Hey, you guys, thank you guys so much for liking and commenting. It's really encouraging having you guys with us. And please do your own research. This is for educational purposes only.
Unless it's right.
Yep. And we'll see you next time on The Bottom Line.
Have a good weekend, everybody.
Take care.
Cheers.
Bye.
See you.
2 traders, 2 visions, 2 objectives, 1 chart. The bottom line.